This is Nightly Business Report with Bill Griffith and Sue Herrera.
Active or passive, stocks are having their best start to a year in decades. And with a bull run 10 years strong, are indexes still the best way to go? Playing the game, the big money parents shell out on the college prep industry. And round two, Amazon got pushback in New York. Well, now its plans for a new headquarters in Northern Virginia get put to the test as well. Those stories and more tonight on Nightly Business Report for this Friday, March the 15th. And we do bid you a good evening, everybody, and welcome back. Sue is off tonight. Yes, today is March 15th, and if you remember your Shakespeare, that means it's the Ides of March. And thanks to the saga of Julius Caesar and his friend Marcus Brutus, it is a day, if you're superstitious, to worry about. But it turned out that investors didn't need to worry today as stocks took off on renewed optimism about the ongoing U.S.-China trade negotiations. Stocks also got a lift from Boeing after a report said that the company was set to roll out a software fix for its grounded 737 MAX planes in 10 days. But then Boeing did admit its timeline for a fix is unchanged. Well, today the Dow rose 138 points, the Nasdaq climbed by 57, and the S&P added 14. And for the week, all three major indexes were solidly higher. In fact, for the Nasdaq and the S&P, this was their best week of the year so far. And with the strong surge to start the year, many are again asking, are you better off with passive index investing? Bob Pisani has the story.
Call it the triumph of indexing. Fund managers continue to trail their benchmarks. Active managers who claim that they would do better during periods of heightened volatility, they're going to have to find another argument. This week, S&P Dow Jones Indices released its annual report on how actively managed funds performed against the broader market. The conclusion, active managers continue to show dismal performance against their passive indexed benchmarks. Roughly 65% of large cap funds lagged the S&P 500 last year. That now marks the 9th straight year that's happened. 2018 stood out because of the volatility in the fourth quarter, but even with all those wild swings, active managers did not outperform. The study will no doubt bolster the claims of many financial advisors who say that investing in low-cost passive funds remain the soundest long-term investment strategy. And it's not just a one-year phenomenon. This study's been going on for 16 years, and the long-term results only strengthen the claim for index investing. Indeed, while a fund manager may outperform for a year or two, the outperformance does not last. After 10 years, for example, almost 90% of large cap funds underperform the S&P 500. After 15 years, more than 90% are trailing the index. And longer term, it didn't matter what asset class you were looking at. The numbers were not much better in other categories like small cap stocks or fixed income. 80% or more of active managers across all categories underperformed their respective benchmarks over a 10-year period. Looking at managers' overall record last year versus the broader S&P 1500 composite, 2018 was the fourth worst year for stock managers since 2001. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And joining us tonight to make the case for active investing is an actively managed fund manager. Sandy Villery is back with us now. He manages the Villery Balanced Fund. Sandy, good to see you again, as always.
You too. Thanks, Bill.
Better performance on lower fees. You have to admit the advantage still goes with the passive index funds. What say you?
Sure. I mean, certainly on the fee perspective, but if you look at a lot of the actively managed funds, a lot of them are sort of closet indexers. So they really have a low kind of active share where they really don't deviate much from the benchmark. Whereas what we try to do at Villery & Company is to really concentrate our positions on about 20 to 25 of our very best ideas and try to increase that active share so that we do deviate from the benchmark. So that's sort of our take on it.
And you bring up an interesting point. You have to admit the structure of the market has changed dramatically over the last 10 or 15 years, where you have this proliferation of ETFs, the exchange-traded funds, many more index funds, the rise of algorithmic investing, which tends to move the indexes in tandem at all times. I mean, it just plays itself out where you want to go with index investing at that point, right?
Yeah, and it's interesting when you look back at December of last year, which is really the worst month since the Great Depression, because I think of all the ETFs, et cetera, you had pretty much the worst, the correlations really went to 1. Everything moved exactly in tandem, which was a little frightening.
However, I have a theory, let's see what you think, that it's as long as the market is in a bull market, yes, index investing will be the advantage. But when you get a bear market inevitably or a down draft of some kind, that's when you active managers can outshine. What do you think?
Yeah, so when you look at the S&P 500, it is market cap weighted. So the top, top 10 positions are ones that have been very successful. So you look at the FANGs, the Facebook, Apple, Amazon, call it Google, and I'd add Microsoft to that list, are about 14.5% of the S&P 500. So when someone buys that passive fund, hopefully they realize they're putting 14.5 cents of every dollar into those 5 companies. So, it's all fun when things go up and they continue to do well. But if you get some issues like happened with Facebook today, where you get their chief product officer that's stepping down or other things from an antitrust standpoint, it could be a tough sledding for some of those big guys.
Indeed. Sandy, as always, again, thank you for joining us tonight.
Thank you, Bill. Sandy
Villery with the Villery Balanced Fund. By the way, that hope that I mentioned earlier about trade was sparked by a report that China's vice premier spoke on the phone today with Treasury Secretary Mnuchin and with Trade Representative Lighthizer. There was also a perceived positive step at the close of the 2-week-long National People's Congress in China. Eunice Yoon has more details on that from Beijing for us.
The main event today was the passage of the new foreign investment law, which could be a signal that Beijing is willing to make compromises on its trade deal with Washington. In a highly unusual move, the draft law was revised at the very last minute to include language that addresses a long-standing issue facing American companies on IP theft. One of the big complaints is that if companies want to introduce a new product or open a factory here, they need to go through a licensing process with a government-led board and give a lot of proprietary information. This has been seen as a method to steal secrets and pass them to Chinese competition. The new law is meant to address those concerns, barring officials from divulging trade secrets and threatening them with criminal penalties. The American business community here sees this as a positive step, though there is the question of how it will be implemented. At his annual press briefing, Premier Li Keqiang said he hoped the U.S. and China would produce a good trade deal. He also became the highest-ranking official to attempt to ease fears that Beijing is using technology made by Chinese firms like Huawei to spy on other countries. He said, "Let me tell you explicitly that this is not consistent with Chinese law. This is not how China behaves. We did not do that and will not do that in the future." On the economy, the premier outlined measures to stabilize growth. The most important tool, he said, big reductions to taxes and other fees. He said previously announced value-added tax cuts would kick in April. Social insurance cuts would start in May. And he repeated that China wouldn't engage in a flood-like stimulus. For Nightly Business Report, I'm Eunice Yoon in Beijing.
It has taken down celebrities and CEOs, and it has already spawned more than $500 billion worth of lawsuits. And in the process, this week's college admissions scandal has shined a light on the big business of getting into college. Tonight, our Robert Frank takes a look at one part of that, the advisors.
The college cheating scandal has cast a spotlight on one of the fastest growing industries in education, college consultants. There are now about 8,000 private educational consultants in the U.S., up from just 2,500 5 years ago. Revenues are over $400 million a year. If you add in test prep and tutors, the numbers are estimated to be in the billions. Now, college consultants say that William Rick Singer, the man at the center of that cheating ring, was just a bad actor in an otherwise important industry that helps guide students in the college process. Demand is soaring for kids of younger and younger ages.
Every other day, I have a second grader or a third grader parent, family calling me asking what can we do as a second grader to help with the college admissions process. And I say there's nothing we can do. The only thing for you to do is that your child do what he wants to do. If he was interested in art, ceramics, painting, music, let your child explore those passions or talents and then take it from there.
Many advisors charge around $15,000 a year, with others charging by the hour, some over $1,000 per hour. The most expensive programs can run to the hundreds of thousands of dollars over multiple years. Now, some estimate that college consultants are used by 1/4 of the students at private colleges. The advisors say their focus is helping kids figure out what they want in a school, steering them to the best fit, and giving them a roadmap to get there. Yet many parents, school officials, and others say the college prep industry preys on the anxieties of wealthy parents and helps widen the gap between the haves and have-nots in education.
We offer scholarships and pro bono services for students who can't afford it because we're not in this industry to widen the opportunity gap. Unfortunately, this is the game. It's an unfair game. And we want to make sure that all students, regardless of their family income level, has a fair chance, as much as that could be.
The bull market for consultants is expected to continue because the acceptance rates keep shrinking and the criteria for getting in remains so opaque. The acceptance rate for Stanford was 20% in 1994. Now it's under 5%. With odds like those, it's no wonder that families are seeking any help they can get. For Nightly Business Report, I'm Robert Frank.
You know, right now it may be easier to get a job than to land a spot at a prestigious university. In fact, the Department of Labor said today that there are 7.5 million job openings across the country. That is the third highest level on record. But as we've heard, the problem has been that many employers have not been able to find enough skilled workers to fill those jobs. Joining us now with how you can land one of those jobs is our senior personal finance correspondent, Sharon Epperson. What are those skills that we keep hearing about that people are in such demand right now?
Well, Bill, a lot of people think they're hard skills, that you need to know the newest technology, and having technical skills is very important.
Right.
But it's also important to have soft skills. Career Builder did a survey, and they asked hiring managers, how important are these so-called soft skills? They said 80% of the hiring managers want these skills more than hard skills. Be a team player, be able to work with many people on a team, pay attention to detail, and focus on customer service, not just outside of your company, but within other departments. Make sure you're able to work with others.
Are there areas that are more in demand than others right now?
Skilled labor actually is where a lot of the jobs are, about 25% according to Career Builder. But another really big area is data analysis, also digital marketing and cybersecurity. And what's interesting is these jobs are in many different industries. You may find cybersecurity experts in healthcare or financial services, not just technology companies. So what's interesting is to focus on the skills and then go into various areas, and those skills become transferable to many different jobs.
But here's the question, how do you get those skills? Where do you go, right?
So it's important to try to volunteer if you can for a small business, for a nonprofit organization, getting some of those skills, take a class. When you get that experience, make sure you include that on your resume. Volunteer experience is still experience if it's relevant to what that job is looking for, and also make sure that the words that are needed in terms of the type of technology that you're learning, include those words on the resume also. And the most important part is stay positive, be confident, come into the interview, present yourself in the cover letter and in your resume as if you've got this, you're ready for the job. Even if you're learning on the way, don't let them know that. You're going to be ready.
I heard somebody say this week, and this is a bit of an exaggeration, but anymore you don't need a degree, you just need job skills.
You definitely need job skills. So while you're getting your education, those internships are really critical. And volunteering, again, you know, we want to get paid for our work, but
right.
If you need the skills, then you should just get that experience.
Sharon Epperson, thank you as always.
Sure, my pleasure.
Have a good weekend. Coming up, this week's Market Monitor says, believe it or not, there are ways Washington can help your portfolio. He'll tell us how. Tesla has finally taken the wraps off its highly anticipated next vehicle, the Model Y. This small SUV won't be out until late next year, but already questions are swirling about whether this will be a huge hit or not for Tesla. Phil LeBeau has more for us tonight from Phoenix.
Bring out the Model Y. Yeah.
It's the small SUV driving big expectations. Tesla's Model Y, starting at $39,000, could eventually be the automaker's best-selling vehicle ever. especially with the world's growing appetite for smaller utility vehicles.
I'm confident that it'll be of any midsize SUV, it'll be the one you want.
The new SUV will be built at Tesla's plant in California and at a new plant under construction in China. Given the challenges Tesla's faced ramping up production of its small sedan, the Model 3, some analysts are wondering if the Model Y will wind up having similar problems. By the time the Model Y comes out, there will already be a number of other electric small SUVs, adding competition as Tesla tries to push sales from 250,000 it did last year to the expectation of well over 500,000 vehicles next year.
We think Tesla is going to be facing a lot more electric vehicle competition from the likes of Audi, Jaguar, BMW, Mercedes, and others, starting with the 2021 model year.
And that's not the only challenge facing Tesla CEO Elon Musk. He's been stripped of his chairmanship by the SEC and is still battling the regulatory agency over how he uses social media to talk about his company.
Like 2018 was probably felt like aging 5 years in one. Honestly, it was really intense.
Tesla's biggest difficulty right now is managing its cash flow and potentially turning a profit while trying to sell more lower-priced vehicles like the Model 3 and eventually the Model Y, which is scheduled to go on sale late next year. Phil LeBeau, Nightly Business Report, Phoenix, Arizona.
Apple loses a round against Qualcomm, and that's where we begin tonight's Market Focus. A San Diego jury today found that Apple did indeed infringe on 3 patents held by mobile phone chip supplier Qualcomm. As a result, Apple must pay $31 million for the infringement. And this was only one of a series of patent lawsuits between those two companies going on around the world right now. Shares of both were higher. Apple was up 1% to 186.12. Qualcomm gained 2% to 56.60. Elsewhere, in an effort to cut costs, Ford said today it is cutting 5,000 jobs in Germany and an undetermined number in the UK. It's all part of a larger $11 billion plan to restructure the automaker's operations worldwide. Ford was up 2 pennies today to $8.43. Shares of Ulta Beauty hit a 52-week high today after its quarterly results topped estimates after the bell last night. The cosmetics retailer's same-store sales rose nearly 10% on an increase in customer traffic. The CEO cited the popularity of Kylie Jenner's Kylie Cosmetics. Ulta gained better than 8% today to $338.41. Newell Brands CEO Michael Polk is going to retire at the end of the second quarter after serving in that role since 2011. During Polk's tenure, the household goods company had been accused by activist investors Starboard Value and Carl Icahn of strategic missteps, and the company eventually agreed to give them board seats and accelerate a turnaround plan. Newell was up a fraction today to 15.56. Time now for this week's Market Monitor. And our guest has names of companies that he says could benefit from policy and regulation changes in Washington. This is his first time on the program. We welcome Ben Phillips. He's Chief Investment Officer at Event Shares. Ben, good to see you. Thank you for joining us tonight.
Thank you, Bill.
The first one has to do with the possibility of any infrastructure plans that may come out of Washington, and you've chosen a company that might benefit from that, right?
That's right. Granite Construction, ticker's GVA. This is a company that we really believe in. We like the management team. 60% of their revenue comes from, infrastructure spending for the most part, and usually that's led by the states. And just one fun fact for you, 29 states have increased gas taxes since 2013 in order to pay for infrastructure. So this is one we think is going to be the key beneficiaries, as this is a non-election year, and that's when states start hiking gas taxes typically.
Last year, the Supreme Court allowed states to start collecting sales tax from e-commerce companies, even if they're not based in that state. And you've got a company that actually just came public last year, and it's been on a tear this year, but you think it could benefit from this change in rules.
Yeah, it's been on a tear, but they have one of the best technologies out there. It's Avalira. AVLR is the ticker. And it's going to play into the next theme that we're going to talk about too, which is 5G. But Avalara, they're one of the few with this really high quality sales tax compliance software package, and they're able to use it across the nation. And it's really been empowered by broadband internet, and 5G telecom, I think, is going to be the next big empowerment for this company.
Now let's talk about 5G. It's expected to roll out later this year, and you've chosen an old guard name, really, in the technology world. But again, this is another company that's been doing very well so far in 2019. That's CN.
That's right. So this is Ciena, ticker CN. This is like a mini Nokia Ericsson, but they're U.S.-based, the U.S. manufacturer of this equipment. But the thing about 5G telecom, the next generation of telecom infrastructure rolling out globally, is it's much more dense. It requires a much higher density, so you need these nodes closer together versus the typical 4G and 3G cell towers right now, pretty spaced out. So the density requires a higher, equipment capex, more upgrading of equipment, and more spending. We think Ciena is a direct beneficiary of that.
All right, we will see what happens. Ben, thanks for joining us. See you soon. Ben Phillips with Event Shares joining us as our market monitor tonight. And coming up, Amazon faces activists in Arlington.
A key vote this weekend could decide whether Amazon's HQ2 in Virginia goes the way of HQ2 in New York. I'm Scott Cohn. We'll have the story coming up on Nightly Business Report.
Last night, we told you about Amazon's real estate impact in Arlington, Virginia, with homes there selling at a brisk pace for rich prices. Well, now a key vote this weekend in Arlington could decide if Amazon's HQ2 project there does go forward or if it gets the New York City treatment. Amazon is promising to create some 25,000 jobs in the Crystal City area there, but some activists want to do what New York City did and send the company packing. Scott Cohn is in Crystal City for us tonight.
There's no question Amazon would transform Crystal City, but there are lots of questions about how.
As long as they're doing what they can to make sure that traffic doesn't become like a major issue, we don't think it's a good opportunity for another Virginia.
What I'm going to be concerned about is what the workers are going to get as far as a living wage.
Well, I'm sure that's going to make prices skyrocket, and it'll make it hard for people to potentially buy in the future.
A coalition of community groups has been whipping up the frenzy, energized by activist success in driving the project out of New York. Now they're targeting a Saturday vote by the Arlington County Board on $23 million in new incentives for Amazon.
We absolutely think that the county board should vote down these incentives and put that money towards investing in the community.
Proponents say the incentives are investing in the community, on top of $750 million already approved by the state. County Board Chairman Christian Dorsey is resisting calls to delay Saturday's vote.
There is no purpose to the delay, and when you have no purpose to something, doing it, to me, is a breach of the public trust.
The county incentives are tied to the amount of office space Amazon occupies, a boon to developer JBG Smith, which owns most of the property in Crystal City. And there are other perks for Amazon, including a provision giving it advance notice of public records requests, all of which the county defends.
This is the way economic development has gone in this country for the past decade.
$23 million in incentives is the equivalent of about 1 hour's revenue for Amazon. So even if the county rejects the package, it's not clear it would make any difference, and Amazon isn't saying. But the activists vow to be there for every zoning request and building permit to come, making HQ2 not nearly as easy as Amazon apparently once thought. For Nightly Business Report, Scott Cohn, Arlington, Virginia.
And before we go, a final look at the day and the week on Wall Street, both strong. The Dow rose 138 points. NASDAQ technology continues to be the leader this week. It climbed by 57 points, and the S&P added 14. Now, for the week, all three of those major averages were solidly higher. And for the NASDAQ and the S&P, this was their best week of the year so far in 2019. That is it for Nightly Business Report for tonight. Thank you so much for watching as always. We want to remind you that this is the time of year when your public television station seeks your support, and we do thank you for that support. Have a great weekend, everybody. We'll see you on Monday.